What if one of the market's strongest historical signals is appearing right now, and almost nobody is talking about it? The S&P 500 has now completed both an 8-week and a 9-week winning streak. Historically, investors often assume rallies like this are becoming overextended. But the data tells a very different story. At LRG Wealth Advisors, we spend significant time studying market history because historical precedent often improves decision-making. This study examined every completed 8-week and 9-week S&P 500 winning streak going all the way back to 1927. The goal was simple. What typically happens next after markets demonstrate this kind of sustained strength? The results were remarkably consistent. Following 8-week winning streaks, the S&P 500 was higher 12 months later, 88% of the time, with a median gain of approximately 12.4%. Following the rare 9-week streaks, the market was higher 77% of the time 1 year later, with a median gain near 11%. Importantly, these signals have appeared across vastly different environments, including the Great Depression, post-war recoveries, inflationary periods, and modern bull markets. One of the most interesting findings may actually be when these signals did not appear. Neither an 8-week nor 9-week streak occurred during the most speculative phase of the 1999 dot-com bubble. Instead of steady institutional accumulation, that period was dominated by narrow leadership, volatility, and speculative excess. Historically, these longer winning streaks have tended to appear during healthier and broader market advances. That distinction matters because investors are often tempted to fade strength simply because markets have already moved higher. But historically, sustained momentum combined with broad participation has more often reflected durable institutional buying rather than exhaustion. Of course, no historical study guarantees future results, and unexpected macroeconomic shocks can always emerge. But history suggests these types of signals have generally aligned with constructive market environments rather than major speculative peaks. The broader lesson is that disciplined investors benefit from studying probabilities instead of reacting emotionally to headlines or short-term narratives. Market history rarely repeats perfectly, but it often rhymes closely enough to provide meaningful perspective. We enjoy providing helpful information to help you make sense of markets and important financial planning concepts. Engage LRG Wealth Advisors so we may apply market wisdom to your financial plan and investment portfolios so you may live the life you imagine. This is LaRue Gibson with LRG Wealth Advisors.